All right, time for news from the eNCA Money Desk, and it's back to banking. Capitec Bank is once again bucking the trend, producing a solid set of interim results. Profits up 20%, by the way. And at a time when other banks are shedding jobs, Capitec is planning to employ 600 more people. So what's the magic formula? Well, to answer this, we go to Capitec CEO Gerrie Fourie. He joins us now via Skype. Gerrie, thanks very much indeed for talking to us. You're bucking the trend. Is it Capitec's market space, or are you doing something differently?
Yeah, thanks. I think it's all about the execution of our business plan. We're focusing on simplistic, affordable banking services, and I think that's what we're getting right. And I think given what is happening in South Africa now, people are looking for value, and I think that's what we're offering. And together with that value is very good service.
It comes at a time, though, a lot of concern about banks reducing their floor space because of digitization. We had a planned strike over the resulting job losses, which was halted today. It's interesting that you got increasing number of people using your app, yet you still want to increase your physical presence. Gerrie, are you still with me?
Yeah, I can hear you now. I lost you there for a second.
I was just saying that you've got an increasing amount of people using your app at a time when other banks are decreasing their floor space. You're not only seeing more people using your app, but you actually want to increase your physical presence. Why is that?
Well, what we're seeing is that our digital offer is actually taking people out of the branches, but then it enables our consultants to actually better connect with our clients and better inform our clients, so we get better product take-up. So it helps us. If you look at, for example, the funeral, we've managed to sell over 1 million policies in a year's time. So on the one side, it takes the mundane day-to-day transactions out, but when it comes to the selling, informing, educating the client to make the right choices, it enables us to perform those functions, and that's why we're still looking to open up branches. We've got about 50 branches that is under extreme capacity constraints, and that's why we said we would like to open up another 20 before year end.
Were you concerned about the banking strike that would have gone ahead tomorrow had it not been halted?
Yeah, I think, the moment there is a strike going on, it will affect delivery. And it's interesting, we've got 12.6 million clients, 6.8 is on digital, so they will be fine tomorrow. And the other 6 million that's very dependent on branches, they would have been affected. I think one can spend your time much more positive in South Africa to look at how can we grow the economy rather than to have a strike.
You mentioned in one of your earlier answers that you were signing about 100,000 new funeral policies per month at a time when consumers are really watching their wallets very carefully and what they're spending on. So I think that was an interesting feature of the results, wasn't it?
Devin, can you hear me?
Yes, I was saying it's interesting that you were selling 100,000 funeral policies a month at a time when consumers are really watching their wallets quite carefully.
Well, I think if you look at the funeral policy, when we put it in the market, the aim was to be at least 30% lower than the market. In the majority of cases, it's much lower. And I think if you look at the complete offering, the features of benefit of the product, it's a very good product. So, and it's also very well understood by our sales consultants, and I think that's the result. That's why we're selling 100,000 policies.
All right, I'm going to leave it there. Thanks very much indeed, Capitec CEO Gerrie Fourie. Quite interesting, Marcel, that this bank is really, employing when we have such a tight time for banks now moving more into the digitized space.
And it's an important market that they service, and I suppose other corporates who work in that space would do well to keep an eye on just how they are dealing with the needs of that ever-increasing market. And now that has been one of our major stories today or this last week in the banking industry, but I believe job numbers are out today. Devin, what are they saying? Do we want to know?
Well, it's always a very good thing to dip in to see how we are doing on the jobs front, and basically these are not unemployment numbers. They are employment statistics which basically tell us how the different sectors of the economy are either creating jobs or losing them. So this is what it's telling us between April and June this year. this economy losing 2,000 jobs. Not a very, very big or significant number, but it does put the number of people employed in this economy at just above 10,100,000 people. So what does it mean, broadly speaking? Well, from last year, around this time, we've actually increased the number of jobs 1.5% from 2018. But yes, while we see an increase, Marcel, the important thing is that we are getting so many people entering the job market. That's why when you look at the unemployment number, it's still quite stubbornly high at 29%. So when we take a closer look to see which of the industries or sectors are really feeling the pinch, look at that manufacturing between April and June losing 15,000 jobs, business services down 14, and the construction industry also one of those sectors that are affected by policy uncertainty, by the growth of the economy, losing 9,000 jobs between that period, April and June. Were there any sectors that actually created jobs? Yes, they were. Community services up 44,000. These are essentially government jobs, Marcel, and if you'll remember, we had an election in May, so that number's up because of your casual employment at the voting stations, for example. It's not going to last, although we would want it to be that way. Mining and quarrying, I suppose, with the commodity prices going up in the particular period over the recent months, we have an increase. Overall, we know over the last few years, mining has actually been losing jobs. So, yes, that's the picture. Unfortunately, we would have wanted to see a large-scale improvement in the sectors of the economy providing jobs. Not really the case.
And of course, a very interesting factor to remember when you look at those community services jobs in government, there's been a lot of talk coming out of especially those in government who control the purse strings, that they need to start ensuring that those departments start looking more lean and mean because of that bloated salary bill that they have month in and month out.
Interesting observation. What you're essentially saying is that government's not going to be the sole provider of jobs.
Can't be.
It's on an austerity drive. Yes, it's something we've got to look into.
And when we watch all those little arrows going down and the number of jobs that are being shed, it's important to remember behind each one of those is a family that is without a salary as well. Devin, do we have a market update for this afternoon?
Indeed. We are seeing some positivity on the markets. It's not because of anything happening locally, but, the on and off tension as a result of the fight between the US and China trade dispute, that's caused a bit of havoc within the markets for months, but today there's some optimism because there's some easing of tensions. So markets globally are doing well. The JSE is following that sentiment. It's up more than 0.75% a little earlier. Also, we saw that banking strike being averted, so banks and financials naturally would be up and carrying that optimism. So they're also in a good position in this early afternoon. Let's take a look at the Rand. The Rand also feeling some international good sentiment. It's now strengthened to below 15 Rand to the dollar mark. So 14.97 to the US dollar, for a euro 16.36, and then 18 Rand 48 for a British pound, Marcel.
Thank you so much.